Are we in a bear market rally or are we in a bull market? Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 14th, 2016. And let's just tackle that question head on, okay? Here's my favorite headline this week, and it's really the question I just posed. Are we in a bear market rally or are we in a bull market? And this article says the Fed data may hold the clue. I actually agree with this headline. I usually poke fun at them. But look at this trader. Look at this guy here. I love his contemplative look. Look at all the monitors he's got, too. You'd think he'd be able to find the answer with that many screens full of data. But I think we'll turn to the charts and look for the reality of what the charts are telling us about what's happening in the market. So let's dive right into that. So here's the daily chart for the Dow Jones Industrial Average, and you can see we definitely have been in a rally. The question is that a new bull market or is that simply a minor correction to the bear market? If you've been watching my updates for long, you know what I believe. I believe this is merely a correction to a much larger ongoing bear market. And I think there's some signs that are showing us that this is ready to head down pretty quickly here. All the indicators, all the technical indicators have not changed this thesis that we're in a bear market. First on this daily chart, look at the amplitude, the velocity or momentum that the down moves have been in comparison to the up moves. These are much bigger. And notice also that the amplitude of this current up move is less than the previous one at the last winter before the big move in late December, January took place. So, and let's jump up to a weekly chart real quick and just get some context. So we were in a 6-year bull run. That was awesome. We continue to make this pattern defined by Dow theory: lower lows, lower highs. We almost put in a new low there. We rallied just a little bit. It has to go up and take out this high here. It has to go up and take out this high here for there to be any kind of evidence that this trend is continuing. And again, I think the evidence is building that it's going to reverse from here and go put in some new lows. The exact timing of that, we can't be sure. This is a very mature short-term rally that we're in. And to see what's going to happen next, let's go down to a really, really small time frame. Let's go down to a 60-minute time frame. So this is the S&P 500 futures contract on a 60-minute chart. Every bar here is an hour. I've been showing this exact same chart with these same levels on it for about 3 weeks now. And if you look, we had a pretty strong move up. That's called a wave 3, Elliott wave 3. We had a really textbook wave 4 correction down, and we had established a wave 5 target zone. Now last week it was in the target zone, and it's channeled just a little bit. It's kind of just bobbled around, and then it made this push up at the end of last week. Now this is still in this wave 5 target zone, but look at how we're losing momentum. Back here when we had this initial move up, look at the amplitude here in this oscillator, and look at it compared to this wave 5 move, and notice that these larger ones are getting markedly smaller. That's a clear sign that it's running out of momentum. Now the next move, so wave 5 is completed and it's in the target zone. 3 things can happen after wave 5. One can be a fairly dramatic A, B, C correction down in the opposite direction. That could certainly happen. The next is a complete new series of 5 waves down, and that'll be dramatic. We'll have a 1, 2, 3, 4, 5 down to some significant lows. The other thing is it can do what's called a complex correction and just bobble around and do nothing and be super frustrating. That's the less likely. I think it's getting ready. It's showing us that this trend is losing momentum and it's about ready to head down. It hasn't proven that yet, but just based on what's happened before, that would be the high probability outcome. So I'm looking for this thing to turn around pretty quick. And the Fed meeting and the economic data coming out next week could be the catalyst for that. Let's look at the economic calendar for just a moment. So here is the Bloomberg Business Calendar. This is a great resource showing the economic reports, planned reports that are scheduled to come out next week. And there are a lot. Starting on Monday, we got PPI, retail sales. Nothing on Monday. Tuesday, PPI, retail sales. Wednesday's a big deal. CPI, housing starts, industrial production. industrial petroleum status, and this one is a big deal. Of course, oil is a big deal right now. And then the big granddaddy here, the big deal, 2 o'clock Eastern time, the FOMC meeting notes and forecast, and the press conference with Janet Yellen. This is a big deal, and this could be a catalyst for something. The market will move, and I think the technical indicators are calling for a move down. We can't know that for sure, but we can sure watch this. And if it does head down, we'll be ready with some really good trades for that. And then continuing the week, Thursday, jobless claims and the Fed business outlook. So unusually heavy week with economic reports, with the big deal happening Wednesday, 2 o'clock Eastern time. I talked about the oil report coming out, and this is a really interesting look at oil. So on the bottom, I have the S&P 500 futures. This is on a daily chart. And on the top, I have the oil futures contract. Now, if you look from the beginning of this year, from January, really from this point, these things have been moving in a almost lockstep. If you see the patterns here, they're 90% correlated. They are highly correlated. Now, that relationship is not historical. If you look at, to the left of my cursor here, you can see they weren't really moving together. And if we go to a higher time frame, let's bump to a weekly, they don't move together at all. And that makes sense. That totally makes sense. That higher oil prices, they only help a small sector of the market. Higher oil prices, higher energy prices, they're just higher cost for the rest of the market, right? So that relationship, that lockstep relationship that they're in currently, is not historical, and I think it's about to be broken. Now, with that context, let's go look at the oil market. What I think is going on there. If you watched last week's report, I said, oil seems to have put in a bottom. It's been in a long downtrend, down from 140 bucks a barrel, and we've had this long sequence of lower lows, lower highs, lower lows. We put in what's called a higher low, and we went and took out this high. And I said last week, if we went through 3709 with some pretty good momentum, for me, that was signaling the recovery in oil. Well, it did that with some good momentum. And I'm on record, I think the recovery in oil has begun, and I think it's going to be potentially as dramatic as the recovery in gold that we called, and we've been getting some great trades. So I'm already taking some long energy-related trades, and super excited. We've waited a long time for this. We've been patient, and now we're starting to enter trades on oil. If you're interested in seeing some of those trades, participating in my stock pick service, there's a link coming up on the screen. I got a great special running right now. You can get in and try it for 10 days at a very low price. So you might be interested in checking that out. But I believe the oil recovery is on. We're into some small cap trades. We're into some larger cap trades. We've got some option plays going on. And you can just trade USO, which is the oil ETF. It moves pretty much perfectly in step with the oil futures contract. So oil recovery is on. I like it. We are trading it. The next one is gold. Let's take a look at gold. So here's the gold futures contract. And if you remember, it's been 5 or 6 weeks ago now, I was looking at the same pattern like we're looking at on oil now, and I said, well, we got this, this higher high, higher low. I said, if gold breaks through this 1113 level, that's going to mean something. I think the recovery is happening. Well, man, look what happened. It's shot up. It's been awesome. It may pull back at some. It's normal. Things don't move in straight lines, so it would be normal to pull back. A little late to be taking entries on gold itself right now. Let's wait for the next pullback, and then when it proves that it's heading back up, there'll be some more trades. Long term, I've showed this before. The long term on a weekly chart, the long term projection for gold is that it would get up to 1347 to 1532. And that analysis is still valid for me. But again, it may reverse a little bit before it heads back up. That's normal. That's how prices move. So that's the update for the week. There's some really good stuff coming up. Really want to watch the reports coming out and how the market responds. I think there's a high probability that we will be down next week, and we'll be getting ready to stage some trades for that when it starts to happen. Again, if you're interested in the stock pick subscription, there's a link on the screen. You can find out more about that. I got a great deal running now. You can try it for a really low price and see if it's for you, if it's your thing. And if not, you get a money back guarantee, and No hard feelings. So take care, be careful, trade with risk control, and I will catch you at next week's update. Thanks.